Welcome, everyone, to Let's Talk Real Estate Investing. In this podcast, we bring you insights, experiences, and lessons from real estate investing professionals from all stages of their journey, along with industry experts who provide essential services to help you succeed. Our goal is to empower you with the knowledge and the strategies needed to build your own personalized real estate investing plan that aligns to your goals. If you enjoy this podcast, please hit that like button and subscribe so that you can get notifications whenever a new one comes out. It also lets me know that I am giving value to everyone. My name is Debbie Balfour, if you don't already know that, and I'm a real estate investing professional and a real estate investing success coach. I help investors like you develop their customized investing strategy and streamline your business operations so that you can scale efficiently to build wealth and create both financial and time freedom. I'm sure that for most people, the wealth part of it is to create actually time freedom for yourselves. So real estate investing isn't a one size fits all. The strategy you do should be unique to you. Today, I'm really thrilled to welcome a friend of mine. She's my special guest today, Jenny Hansen. Jenny brings with her 2 decades of insurance experience to her role as a business executive. In this role, Jenny provides custom insurance and risk solutions to diverse clientele. Jenny's well versed in technical aspects of all insurance products and works with our industry partners to develop new opportunities and innovations. Jenny's passionate about connection with people. We are actually just talking before this podcast recording that she loves connecting with people. She is a journalist for WBN News Vancouver. She's also a part of the World Referral Network, and she does a lot of organizing of their meetups and events. Very busy lady, and I'm really excited to have her here today. So our topic's a little bit different than I've been doing in the past, and Jenny falls under one of those experts that provide an essential service to us. And so we're talking today about commercial insurance for real estate investors. So this won't cover any residential needs, but we're talking commercial. So Jenny, can you tell us a bit more about yourself before we get into this?
Hi, Debbie. Thank you so much for having me. I'm so excited to be here. So, I've been in the insurance industry since 2006, and I focused on commercial insurance since 2009. Um, I started in Victoria, BC, and then in 2012, I moved to Vancouver. I currently work with under Waypoint Insurance Banner. They are part of the Navicord Group, so we're top three brokers in Canada. Um, I do work remotely and I work all along the lower mainland of BC. So, Vancouver, Maple Ridge, Langley, Abbotsford. I love the Fraser Valley. That's where I do most of my business myself.
Awesome. So explain to me like what's commercial insurance? What makes it different from the insurance that I buy on my house?
Yeah, so commercial insurance, there's with insurance in the general insurance umbrella, we have three sections. We have your auto insurance, which is your cars, motorcycles. We have your personal lines, which is like your home, your boats. And then we have commercial, and that's your business, your retail, your tradespeople, technology, land development, everything, that doesn't fit, that's your home essentially would go under your business. That's where commercial insurance
So
comes in.
multifamily.
Yes, multifamily residences, apartment buildings, retail stores, mixed use buildings where you have, the business on the bottom and condos on top. Even townhouses in strata
Mhm.
would be more on the commercial side versus personal.
Okay. And could I get commercial insurance for one of my rental properties that's a single family home?
Absolutely. So what we find with a lot of people is that they will, for their own home, they'll put in personal lines. And
Hmm.
then if they have short-term rentals or if they have multiple units that they rent out to third parties for short or long-term use, that would be through the commercial lines.
Okay, so yeah, so you could put your rentals that even single family that's not a multifamily under a
Yeah,
commercial. What would be the
absolutely.
advantage of doing that?
So there are coverages that are offered under commercial lines that you might not see in personal lines, and that could be things like equipment breakdown. So that would be, if you have a business that has, like, say, a lot of refrigerators, or a restaurant that has freezers and fridges, and there's electrical arc that fries electricity, or the wiring in your equipment, it would cover that. There's much more detailed coverages for, loss of rents or loss of profits.
Hmm.
And it's just little coverages like that. With commercial coverage, we customize every policy to what the client needs. It's not a one package fits all. So we gear it much more closely to what you actually need and what you're doing, than just the fact that you have four walls in a house, say, like for a home.
Okay, excellent. What are some myths around insurance?
There's lots of myths. The first one, and I think the most common one, is that insurance will always go up, that once you buy a policy, you can expect an increase every year. That is not the case. And in fact, 2025 is one of those unique years where we're seeing prices go down. It's not, it's kind of a hostile takeover. What happened is the insurance companies want to keep increasing the prices, but Lloyd's of London, who works through MGAs here in Canada, they are lowering their rates. And what happened is the insurance companies who kept increasing their prices were losing all their business. So in order to compete with Lloyd's of London, they had to start reducing their prices as well. So what you'll find is in renewals, insurance companies will actually try to increase your rates, but as soon as you go out for new quotes, you're getting quotes that are much cheaper than you were paying last year. And my
Mhm.
clients are seeing between 15 and 30% decrease in their pricing for the exact same coverage. So this is the year that everybody should go out. Even if, they just got a new policy last year, they should be remarketing this year for sure.
Okay, excellent. I do want to say, as a person that's just had going through an insurance claim right now, that just to plug for and make sure that you're not just looking at your premiums, that you're looking at your coverage and you're sufficiently covered, because you may think it's not going to happen to me, and so I just want to pay lower premiums, but it's not. A lot of times it's not if, it's when. And,
Right.
so I've been caught in that I haven't, I didn't choose to have my coverage lower. I just didn't read my policy, didn't understand. I trusted the broker. And now I'm going through where I was underinsured for my rebuild of my home. So it's really important that you are pricing it at today's value for replacement.
Yeah. One of the biggest tips I always say to people is get someone you trust, get someone who's explaining things to you and who knows what they're doing. There is
Hmm.
nothing more scary than a broker who doesn't know what they're doing, so they don't want to talk about it. And they're like, don't worry, we got you covered. But if they can't tell you what they're covering you for or the details of your policy, you have a real problem on your hands, especially in commercial, because we build it from scratch and each piece, is added and removed by the broker. You want to make
Hmm.
sure you have an experienced broker who know what they're doing.
Yeah, and definitely. And what I find too, that quite a few brokers, they want to help you out. So they're trying to keep the costs low for you, but that might be at the cost of you not having enough coverage.
Right. It is a balance, because we do find that, especially in today's economic instability, people are concerned about that bottom line. So as
Mhm.
brokers, we try to balance getting a fair price for you, but you're right. It can come at the cost of coverages. So it is a conversation that, brokers should be having with you, saying, like, here's the breakdown in pricing. This is why I think the coverages are important, but here's the cost of them. And having that discussion together and really working as a team to build what's right for your organization. I like to tell clients, like, here are the coverages in your policies, and here's everything you don't have. If you're happy not having this coverage, that's fine. But here are things I really think you can have. And one thing that I find that people really, you know, I, things that people are really hesitant to buy that I think is important is business interruption profits and business interruption gross revenue, or gross income. which is, or rental income is another way to say it,
Mm.
that people want to get 12 months coverage because they want to pay the lowest amount. But the truth is, no home or apartment building or even condo building is getting built within 12 months. They take years. So you should have a minimum of 24 months. I don't even offer my clients less than 24 months because there's no reason, if you have that coverage, that you should do less than minimum 2 years. And
Yeah,
unfortunately, you can't buy more than 2 years, or I would offer that as well.
and if you do, and then also if you do have an issue, there's a, like I did, like a fire, a flood, any of those kind of things, it could take quite a long time before you can get back up and running. And that's a cost. Then you're not getting that revenue. That's a
Right?
huge hit to your business.
Absolutely. Absolutely.
Yeah, definitely. So, what are some things that some tips, like some do's that you would recommend people do around making sure their insurance coverage?
So there's a couple things that I would recommend for clients. One, you want to get in there early. The biggest problem, one of the biggest problems I have with clients is that they wait till 30 days or 2 weeks before their renewal and they think it's enough time. And I can get a couple quotes, but I'm not getting the best quotes with that kind of turnaround. I want to I want to be able to tell a story to the insurance companies that put you in a great light and get you better rates. But I can't do that if I'm also rushing them. So I
Mhm.
like to reach out to my clients that I'm renewing or remarketing, 90 days beforehand, so that I know well in advance what's going on with your business, what changes have been made, what things are going on for you, what is your priority, and what are you thinking about the next year for your business or investments, and being able to tell that story, get you the best rates, and know well ahead of time and very proactively figure out what we need to do for your organization. um, that is the biggest issue. The next one is communication. I love that people trust me with their home, their business, their investments, but I also want to have that conversation so that we're on the same page. I think, you know as much as I want you to trust me, I also want you to hold me into account and make sure that I'm doing what you need. And if we're not having those conversations, we can't do that. And like you said with you, I know when you had your house burned down, you thought everything was understood, and then you found out that they weren't covering you in the way that you needed, and those conversations didn't happen.
Yep.
If I do my job well, there should be no surprises at the time of the claim. You tell me there's a claim, we send it off, and they write you a check, and it should be that quick. And
Hmm.
I'm also an advocate for my clients. So when they have a fire or a pipe breaks and it floods, or any kind of issue where you need reimbursement for the loss of finances and rebuild of your property, I want to make sure that we can make it as easy for you as possible. And that only comes with communication.
Yes, definitely. Yeah. So if your broker isn't having that communication, I think you would recommend that person actually taking the initiative to ask questions of their broker, right?
Yeah, I think there's two parts. You should try to instigate the communication, let them know that you want to know what's going on. And
Mm-hmm.
most good brokers, they will try to talk to you about it. They'll educate you on their end, and you can notify them on your end, and work together to building something you both are, think is good for you. If they're still refusing, there can be a couple of reasons. Maybe they're not well versed in it. Maybe they're newer to the industry, or it's a product they're not used to selling. They might be too busy. Our industry is full of brokers who have books that are way too big for them to manage on their own.
Mm.
And so, they end up, and you can tell, like, they start delaying in responding to you. Their emails are slow turnaround. They always seem rushed when you talk to them. And in that case, you have to have that conversation with them that, if they're too busy, maybe it is better you go somewhere else, or maybe they refer you to someone else in the company who might have more time. If they're just not prioritizing you as they should, then maybe look for another broker or another organization that will prioritize you more. I'd like to think that every brokerage, and especially Waypoint, the people who care about their clients will always put them to the top of the day and make sure they're taken care of.
Mhm.
And if you're not getting that, you should ask them why,
Or get a new broker.
or get a new broker.
Go
And
shop
there
around.
Yeah, I mean, there are other reasons too. I don't want to say that they're not prioritizing you and that no one else knows what they're doing, because there could be other reasons, but
Hmm.
hold them to account. That is our job, to take care of you and to take care of you swiftly. And if someone can't do that for you, you need to take care of yourself.
Right. What would you say some things that you've seen that go wrong in insurance, and say, and from that say, don't do this.
Oh, there's so many things what not to do.
Hmm.
Don't take the first quote that comes your way when you're getting new quotes. Get a few so you can compare them, both coverages and cost. Look at, try to read through your policy. It's very dull and very slow. But if you could read like 2 pages a night for the next couple weeks, you'd get a much better understanding of what you're actually insured for. Focus on the exclusions, because that's telling you what you're not covered for. Most people never see that. And so they're really shocked at the time of claim what's not covered. Um, have your broker write out for you everything that's excluded. Um, the policies will go over multiple times in multiple pages what you're not covered for. So having the broker write it out for you is a good plan.
Like a Cole's Notes version.
Exactly, exactly. Nothing beats reading the policy itself, but having your broker write down the key facts always helps as well for better
Mhm.
understanding. Um, what else? What else not to do? You should never go more than 3 years without a full review and a full remarket. So with my clients, I always set a plan up. So the first year we fully remarket. I send it to every market I possibly can that you fit into. And I usually get, 3 to 6 quotes that I will review with clients. And then the second year, as long as there's no major changes, often I will stay with them. I might send out 2 or 3 preferred broker or insurance companies to get the best quotes to make sure we're still competitive. And then on the third year, we do it again. And it's just to make sure that we're always staying competitive and thoughtful with your organization, that we're doing the right things for you.
Hmm.
Unfortunately, there are a lot of organizations or a lot of insurance brokers, once they get you in and get you locked, they will keep you with the same insurer for 5, 6, 10 years and never remarket you until you ask. And to me, that's lazy brokering.
Okay, so make sure that you're asking. Take the initiative to ask.
Yes.
So,
Yeah. Well,
um,
ideally,
mhm,
you'd have a broker that would take the
mhm.
initiative so you don't have to.
Yes.
Um, but if your broker's not, then you need to.
Then you ask, yeah. So I think that's what I realize is that we're our best advocates. So,
Absolutely.
right. So you've got to look after yourself. It's nice, like you said, it's nice that people trust you, but it's important that we look after ourselves. So take that initiative, ask the questions, request to be remarketed, as you said. So I've got a case study as I'm sitting here, and I mean, I've known you for quite a few months now, and we've talked, and I know what you did. But I never thought about, like, I thought I've got my properties are all single family homes, residential. And I'm going, oh, Jenny couldn't help me with that. But, and then I just asked that question, and you said, yeah. So I have, now let's use me as a case study, right?
Yeah.
So I have a condo, and that's long-term rented. I've got a home that's short-term rented,
Yep.
and I've got two other homes that are more like rooming houses.
Yes.
So tell me a bit about how you would work with me on that one.
So what I would do is you and I would have a sit down and we go through the details of each of the 4 properties. And
Hmm.
then I would send each one out for a quote. There's 2 ways that brokers deal with that. We can put it onto one master policy, which will save you some savings in premium,
Hmm.
but it can also be a little more higher risk, because if you get a claim on one, it'll affect all of them for the next 5 years.
Hmm.
So we look at, putting them on one policy versus putting them each on their own policy. And that way, if there's a claim on one, it would only affect that one location. And
Okay.
so we'd have to compare both ways to see what's going to save you more money and what the risk is if one has a claim. So you said that you had some rooming houses. Those are much higher risk for claims, such as fire and water damage, than say your long-term tenant in your condo.
Hmm.
So those could add a lot of risk to your long-term condo. Um, so,
Well,
it would
they
be something you and I
consider
would
it
talk.
rooming houses because I rented by room, but
Oh, okay.
it's 3 bedrooms, right? So it's 3 tenants sharing, so it's co-living. But
Yeah.
the insurance that I went through right now say that's rooming house,
Yeah.
falls
Anytime you
under
have more
rooming
than
house.
three individuals not related, they consider it a rooming house.
Okay, so I
Absolutely.
have one with three, the other will be four. So yeah.
Yeah. Yeah. That
Hmm.
makes sense.
Yeah, so that's something. So what are things that you would go through with me to, as we look at this, what are things that you would consider, ask me?
Yeah. So the first thing I would do is I'd ask to look at your lease agreement with those tenants.
Hmm.
The reason why is there are things you can put into the tenancy agreement that you can't ask for if it's not the tenancy agreement. An example is, do they have their own insurance? Um, to me, I think it is extremely important for tenants to always have their insurance. As the landlord as well, my tenants always have insurance, and it's not because I'm in the insurance industry. It's because if you have liability insurance, it will cover for any damage you make to that unit when you move before you move out.
Hmm.
So, if my tenant moved out of the home that I rent out, and say he scratched all the floor up, I can make a claim and his insurance will pay for all the damage once he's moved out. And so I think that's really important that you want to protect your building, and you also don't want to make claims if you can avoid it. So if their
Hmm.
insurance will cover it, you know, all the better. And for tenancy insurance, it's very cheap. It's, less than $100 a month for a lot of tenants. So
Hmm.
why wouldn't they have it? It protects them and it protects us as landlords.
Right. Okay. What else would um
So I would look
consider?
at, your rental income, making sure that that's properly covered. Always 24 months, because if something damages the home, I don't want you to be out that income.
Hmm.
Um, we look at the details of it, how it's built, how we're going to rate it, um, looking at whether we put it together or apart. We look at claims, we look at risk, we look at ways to minimize risk. um, you know I've had a couple claims where short-term um, rentals where there's been like small fire claims, something small like in the kitchen. Like I had one where a person literally put a grocery bag on the stove and they hit the knob and it slowly simmered away, and it was more smoke damage than anything because the paper bag started smoldering.
Hmm.
But little things like that, like what can we do to deter people from putting their paper grocery bags onto the stove? Um, and sometimes it just making it more difficult to carry groceries directly into the kitchen. Things like that.
Hmm.
Are you using, what kind of flooring do you have? If you're having a high traffic home with lots of people coming in and out, I don't recommend high end carpet, for example.
Hmm.
Um, you know, looking at ways that we can minimize risk, that and telling that story to insurance companies, like this is what we're doing to really make our house claim proof. Those kind of stories, the way we minimize loss, goes a long way with insurance companies. And I don't expect you as a real estate investor to know what those insurance companies need. So I'm here to tell that story on your behalf and ask the questions so that I can pull that info out of you and share it with the insurance company.
Mm. See, none of my brokers have asked me any of those questions.
That's a shame.
Yeah. We'll be having a sit down, Jenny,
Absolutely.
about
Thank
my
you. Thank you.
properties and see. That sounds good. So what are some like what are some things you would like if you were to give like 3 tips right away to insurance and to real estate investors around insurance? What would be those top 3 tips?
The top three tips for real estate investors for insuring their property is: insure the property before you take it over when you purchase it. Don't wait. Unfortunately, I do a lot of development and real estate people. I work with them in my industry. And
Mm-hmm.
unfortunately, I often get the call a week after, oh, we bought this house last week. We need insurance, you know, and you've gone a whole week without insurance. And that's very scary for insurance companies, and often will surcharge you for it. So
Mm-hmm.
if you're buying a property, it takes months to look at properties to put an offer to moving in or getting tenants in. So let
Mhm.
me know once you've put that offer in and it's accepted, we can write the insurance right away. It doesn't mean we have to bind it right away, but it means that we can start working on it so that when you have that, we're taking possession on March 12th, that, I have that policy at midnight on March 11th going into place. So it's yours and it's, covered. That's important.
Mhm.
Um, the other thing is, we want the claims history on properties. Often people ask, oh, what is your claims history in the last 5 years? Because that's important for pricing. But what's the claims history before the 5 years? Like if you take any building, say a house that you're renting out, what happened 6, 8, 10 years ago? Are you seeing a series of claims that happened and then it was just quickly fixed or remodeled and then, no more claims that we're aware of? Because those are much more higher risk, not so much for insurance, but for you as an investor. You
Mhm.
don't want to get that house that's broken down that is going to take more and more of your money. These investments should be making you money, not costing you money. And so, by accident, as someone who does insurance, I find that I'm often looking at ways, both to save you money insurance, but also let's look at the investment. Is it a good investment? Are you going to put more money than you get out? And if that's the case, there's ways to find hints or clues and tricks about it. I mean, I'm sure many of your listeners already know these things, but they're not always top of mind, especially if you are
Yeah.
new to investing or this is your first investment. It might not dawn on you. So I'm here to be that backup. If it doesn't dawn to you, it'll definitely dawn to me.
I don't know that a lot of real estate investors do think about that. Like when they're doing like a conditional offer and due diligence, I don't think that they actually think about from the claims perspective that you can actually get a different perspective. Maybe I'm, unusual that way, but it's not something that I've heard anybody like as part of due diligence includes. So I love that you've just brought that up because we do have a conditional, like you're saying about, okay, I've just had an accepted offer, but even before that, when we're doing due diligence, so you're able to see a claims history on a property, are you?
So I can't look it up myself. You'd have to ask the previous or the other person's real estate
Oh, the
broker.
really the
They'll be able
okay,
to get that from the
okay.
previous owners. Yes,
So but that's definitely something to consider. And then you work with your insurance broker to understand what that means.
absolutely. Yes,
How that could
yes,
affect you.
yes.
Okay, that's a good point that I've never thought about. One thing I have, done is, and I think that part of, as you mentioned, part of the due diligence should be to reach out to your insurance broker and get a quote or find out, is this place insurable? Because there are
Absolutely.
some components. One point I was looking at a home in Summerland, and right behind, it made it nice and private and very zen because the mountain was like right behind. The problem is that yeah, and they were like, yeah, we have insurance, but when I contacted insurance brokers on it, it was you can insure the house, but if there was a rock slide, it wouldn't be insured unless those rocks hit a like a propane tank and it caused a fire, an
Right.
explosion. Right. So that is something, and so yeah, the person said, yeah, we've got insurance, we're insured, but there's those exclusions that, and this is a big one. This is mountain surrounding this
Right.
house.
Yes, I also, I know there's been houses that I've seen in the past that people want to purchase for rentals, and then it turns out that it was a grow up years before. I don't have the power to see claims on properties, but a lot of insurance companies do. They have a database that they share for claims. So when
Mm,
you have something like a property that's been used for a grow up, often there's water damage that can't be seen. They fix the exterior. It looks nice. You would never know. But we know that when you do illegal grow ups before it was legalized, damage to the core of the house, down to the studs, is there even after they renovate. So a lot of insurance companies won't touch those homes. You're absolutely right. There are homes that are uninsurable that you
Mhm.
might not realize just by looking from the outside.
Yes. Yeah. So I think that should definitely be part of due diligence. I
Yes.
know also with grow ups, it's also electrical
Yes.
is another issue with grow ups. And we've had a few in our neighborhood over, like I've lived here for 20 something years, and they buy new houses and do it in
Right.
it. So you wouldn't think, you think, oh, this is a nice neighborhood, it's a brand new homes. And then you find out later, like a cop is like breaking down the fence of somebody's house in your neighborhood.
Right.
I'm watching them. So that's another one to definitely look out for. So awesome. Well, thank you so much, Jenny. So many like light bulbs today have gone off, but I thought this was just going to be a conversation to share with my with my audience out there. But I've learned so much by this conversation by asking these questions. So thank you so much for all the tips and everything that you've shared with us. Really appreciate it. And you can see that Jenny's information is right on her backdrop. So you can see there. Is that correct? The waypoint, is it WAPOINT or is it
Oh,
WAY?
I'm missing a Y in there. Oh,
Okay.
sorry. Thank you for pointing that out. I'm so sorry. It's WAYPOINT.ca.
Okay. So if you wanted to reach out to Jenny, that would be good. Jenny, do you do anything virtual for other, like, so you are in this region, but another person, say in the Okanagan or out Calgary, can they contact you and you can also do insurance for them?
Yeah, absolutely. I can write across Canada. That's not a problem at all.
Okay.
I can do Zoom meetings, phone calls. If I can't drive to you, I'm always happy to meet you in another way.
Awesome. So this is, this goes across Canada.
Yes.
So that would be great. So, reach out to Jenny, get to know her, see if she's a good fit for you, if you get along and I love Jenny's, authenticity. I love that she's there for her client and not for the insurance company. And like she said, she works with you, understands you, understand your need, and then personalize it. So, and that's my whole theme is that we're all unique, and so our strategies need to be unique, and that includes your insurance policy. All right. Awesome. Thank you so much. Have a wonderful day. Bye, everyone. We'll see you again next time. Don't forget to hit that like button and subscribe.